Okay, cool. All right. Hello, guys. My name is Chris Haven. I'm the Director of Investor Education here at Personafi, and this is part 2 for the day swing trading. Last time we covered charts and technical analysis. This is kind of a continuation, but we're going to expand upon that and then go into any questions and answers. One thing that I really emphasize is in terms of if you want to save money, Think or Swim by TD Ameritrade. That is, and I've gone after a lot of different charts. I've done ones that literally were $1,400 quarterly. I've done ones similar to maybe like $400. And in terms of functionality and what they offer, that is the cheapest one because it's free. So that's what I'm going to be using because since it's free and most of you obviously don't want to spend a lot of money on this and not being cheap, but just being practical. So let's dive in. So again, just so everyone knows, if you have any questions, you can unmute yourself, ask in chat. I'll be watching the chat and answer any questions during that time. So if you remember, we have the chart candles, and what those are, you know, when we look at those, is they're going to look something similar to this. Green means obviously good, and obviously I should probably put something like that with in that respect. And so when we look at those, remember whatever time frame you set, that's your length. So remember, lowercase n is a minute, h is an hour, d day. If you remember, that's what it is. So just looking at it real quickly, if I were to look at these, let me just get to this drawing. If I were to say this is an H chart, that means each one of these is 1 hour. So this would be hour 2, hour 3, 4, 5. So it's kind of just a quick recap because we're going to be doing a lot with that. So with that, let's actually move on to the good stuff. So we then talked about the SMA. So we already explained that, and if you don't remember, you can just view the previous YouTube video on the link below. You can look at that, and we can go over the rest of that stuff. Okay, so we're kind of going back now, but what I want to talk about, let me just get rid of that, is now the MACD. So we talked about relative strength index, or RSI, and we've also talked about the SMA, the simple moving averages. So now we're going to get into kind of more of a combination of the two, maybe not really with RSI, but with this SMA, and then also the lines that we see is the MACD, which stands for the moving average, convergence, and divergence. So you're thinking, oh my gosh, how am I going to ever remember that? So what it actually just means is, excuse me, is it combines two different moving averages, so two different lengths or two different time frames, and it looks for when they cross, and it looks at divergences. So I talked about divergences before if you did the homework. When we look at divergences, kind of just a simple definition with that, and I know this is just very simplistic. There's obviously some more meaning to it, but it looks for when things are going to spike upwards or downwards, or when it's going to be changing directions or diverge away from what it's normally doing. So what you'll see, and I'm going to pull up Think or Swim in a second, but initially the strategy when you're looking at these is you just follow the lines, and then once they cross, that's going to indicate a buy or sell. So that's when you're going to be combining all the other chart stuff to then give an idea of what the picture is, what you're painting, your Picasso painting or your Leonardo da Vinci painting, and that's going to determine what you want to do. Okay, so let me pull up Think or Swim. So what I'm going to do is I'm going to pull up, let me just maximize this. Let me get rid of everything. And I'm going to, so this is now, so what I did was I actually added the MACD study. So if you don't know how to do that on your Think or Swim chart, you're going to click on the big beaker studies, add study, all studies, and then MACD right there on the first one. Okay, and I already added it down there. So here's what it's kind of telling you. So let me zoom outwards. So if you look, I did the 5 minute, I'm going to go to the day. So now we're we're looking at the time frame of it being a day. So each candlestick that you see, that's 1 day's worth. So here's today. This is also technically to, oh wait, no, it's not. This is the 22nd. Yeah, so this one right here, that's today. So the second one, and the reason why is because I'll explain it in a later date why. It's just because the future markets, they start a little bit differently. So when I look at this MACD, let me make it a little bit larger for you guys. So look, as you can see, so you've got, so this is the MACD. Now, if you use Thinkorswim, it's actually really nice because if you can see down here, you're going to see 2 lines. You're also going to see a green, and then like a little bit, this is a faded green is what I call it. So solid to faded. Then you'll see solid faded reds. So initially, again, what the strategy is you just look at it and it determines when things are crossing or when they're diverging from that particular, like if the stock's moving upwards or downwards. So each time it crosses, your initial strategy would be, do I want to short or I want to go long, or do I want to buy a call or buy a put, or or vice versa, or to sell. So if you can see now, some of it may not be as nice, which these are actually very nice, so you can get a pretty good picture. But when I look at these, let me change this. But you look for intersection points. So I'm not going to worry about this part right here. I want to just show you some very basic ones. There's an intersection point right here. There's an intersection point right there. There is an intersection point right there. Okay. So when you see it intersect, what that's telling you is that in terms of the long term of how the moving average is, so you have a longer length, it crosses the shorter length of that. So that means it's building up momentum. So I didn't talk about what momentum stands for, but momentum basically means it's just, well, it's like a car. If you're gaining acceleration, or gaining momentum, things are gonna go up or down quickly in that respect. So if you see right here, and let me turn that off. Quick style data box off. Okay. So if you see at this point right here, what this intersection point is telling you at this time right here, so it was bullish for this time frame. So again, if you see my cursor, it matches with the chart. So if you see from this, nothing's intersecting. Okay, so that means at this time, it has been a full bull run. Oh, hey, puppy. All right. Now, once it crossed here, that's a technical indicator. So it's telling you something like, hey, it's kind of losing that momentum at this point, and it's crossing. Now, again, this is data that's already happened. So when you're doing this is where you have to start looking for formations or things that are about to appear, then make a determination based on other stuff that you see. Okay. So right here, notice how it still goes upwards here, but it's still showing it's just kind of like stagnant, and then it drops all the way down there. So as you can see, here are the charts. Now, the moving average is still going up. So that's where this may not be a good indicator, but in this respect, it did go down, even though this was going upwards. But at that time, it did what it was supposed to do. It told you, hey, this is crossing, it crossed. So as you can see, this was going up. It's just like a roller coaster. If the lines are going up, price is likely going up. Yes, there'll be some red days, but it's in terms of what the math is doing is it's telling you it's still going upwards. Now look here, it starts to go down, 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 and then look at the stock. So let me actually draw that so you can see. So there. So those are the same. And then I'll do red for going downwards. So go down, and then it's going down.
Transactions and membership.
Okay. So now, so this would have been, okay, let's just say you enter long and you're like, oh, okay, how long should I hold this for? So now there are some things with the MACD is they give false signals, meaning it's calculating averages and things like that. So if you try and say, okay, I'm going to hold until it crosses, that may not be the case, because what can happen is you may just break even. Will that be the case all the time? No, it depends, on the stock's movement. There's just so many factors. So I wouldn't say use this only. I would say use this as maybe a verification tool. Statistically, RSI, it has a better advantage than MACD, and that was verified by numerous research papers and data collection. But it's still a good tool because you can see where things start to form, and it can give you a better idea. Now I just keep following. You see it goes further down, down, and it crossed again. Now if you see where it crossed right here, and then where it crossed down there, you would have taken profit if you did that. But that's not always the case. So now this MACD crossed at this point. That would mean I'm going to enter a long position, buy a call or sell a put. Remember, selling a put's different than buying a put, but you would buy a call or buy the share and then use the other indicators to help you. Now, I'm on the day chart. This can be used as day trading or even swing trading, because remember when I talked about the length, all the strategies that I tell you, it's the same thing. It's just you change the length or the time frame. So let's look at this if we were to look at it at a 5-minute chart. Let me get rid of these. And let's just do right here. No, let's do that. A little bit easier to see. So I'm now on the 5-minute. Now this, you could day trade this too. But before I go on, are there any questions on how the MACD works? There's some stuff that I didn't really cover, only because if you're just going to be using the MACD just for trading or day trading, swing trading, that's fine. For longer term, it's also good. A couple of things I didn't talk about are the lengths, and I think you should just keep them where they're at. So again, I talked about length before. What this does is it looks at the fast length, which would be 12 whatever time frame it is, and then 26. Don't worry about MACD length, because that's this stuff. People don't usually change that. You don't have to worry about this stuff because that gets into more advanced things. But the basics behind this is just learning how to read what this does. So now
sorry, can I ask a quick question?
Sure.
It's Vita. So what are we comparing here? Because we've got I know you have the MACD up, and we've got the green lines and the yellow lines, and you talked about it intersecting. You showed us basically where it intersects, but what are we comparing with those two lines? Is that 2 different days, or what are we comparing?
Okay, so basically this yellow line is a longer simple moving average. So this is 26 time frames, or 26. So 26 times 5, that's how many minutes it is. This is 12. So what it's doing is it's looking at the closer trades compared to the long term. So then when you see them cross, that means that they're both going at whatever direction they're going to in terms of a longer period versus a shorter period. That's what you're looking for. So
those intersect would be a bullish move. Is that what you're saying? Where they intersect?
When they intersect, that will either determine a bullish or bearish move.
Okay.
So as you can see, both of these lines. So I'm looking at this one right here. Let me show you right here. See, at this intersection point, they're both going downwards. That would mean a bearish thing. So you would buy a put or short it, or get out of the position. But again, we don't know if it's going to go up or down. So but this can still help you determine, like, hey, should I get out? That's up to you. That's up to you, because you look at everything else that we've learned. Because as you can see, this moving average is still slowly going upwards. However, and it has gone up, even though it was right here, but it was still showing on this technical indicator that it was going downwards. So that's where things can get kind of choppy with this indicator, but it's still good to confirm because
Right.
it's kind of like if you see it with this one, you see it with RSI, and you see it with the simple moving average. Like, let's just say they're all pointing downwards. That's like, what's the hockey? That's a hat trick right there. So that's when I would be like, okay, for sure, I would do that.
Yeah, to get out of your position at that point.
To either get out or get in on a put or
get on. Okay.
Right.
Okay.
So then right here, oh, that's a bad. Let me do a green. So if you see it, it actually intersects again right here. Notice now they're going upwards. Okay. SMA or simple moving average is going upwards. And then I know it's kind of hard to see. Let me make. So see, this is going upwards. I see 1, 2, 3 things that are telling me, hey, this is going upwards. This would be a good, in terms of a technical analytics person, they would say, this looks good. The one thing that's kind of weird is the RSI is right dab in the middle at 50. So, but you have 2 out of the 3. Now, I put more weight into this, but because it was pointing upwards, I would have gone in.
Okay.
So now, will this always be the case? No.
Probably not.
So a good example would be, should I get in, is if you look right here. Oops. Let me actually keep it. So see, this is kind of near. This is today. This is today. So I see. So I'm looking at this cross point right here. Oops. Okay, so this crossed. I check right here. This is going upwards, okay? Moving average is going upwards. So in terms of these 3 technical indicators, this looks like a buy.
A buy.
But things can go down. So but you know, if that's why you set stop losses or profits, because if you just hold on to it, then you may break even. Like I'm trying to see if there's one where it would have broke even. So like kind of right here, there's 2 intersections right here. Actually, there's 3. But if you look right here, it's just sideways.
Right.
So that's where this trade may not have worked, because you have this going downwards, which it did go downwards, but RSI was up. But
it was up, yeah.
But at the time, you can see it was going downwards, but your moving average is going up. So it's kind of like you have to kind of, because this is the futures market and this is live right now. So in regards to that, it's okay, do I want to get in and out real quick? So this would be a day, 1 minute, 2 minute trade at most. And just, you know, not hope, but, you know, the odds are in the favor based on what I'm seeing. You know, and there will be bad trades. So you know, nothing's 100%. But yeah, no problem. Yeah. So just the simple thing with the MACD is you look for crosses. Now, just so you guys know, RSI, that length is 14. The MACD short is 12. So you'll get a cross prior to RSI. So that's what's, and now I have some secrets that I can't share some, but if you think about it, if you're looking for crosses, that's when you're going to look at when a 12 is going to cross a 26. So if you just focus on the fast term, so that's why what's neat is you can modify these, because like I was showing you before, just like the SMA, you can modify these. So I can just change this, and I'm just going to show you just what it looks like. This isn't what I use, but let's just do this. Well, it didn't really change much, but it changed a little bit from where I circled. But if you just think about it mathematically, what's greater, or sorry, what's lower, 12 or 14? 12. So if you keep it at the stock settings, so the stock or the what's it called, the default length, you'll get a confirmation of this first. Then you can use RSI to determine, because that's 14. So so you're looking at 14 lengths to 12 to then a moving average. So that's a trick that people use. So you can first get, okay, I see a cross, let me wait 2 length periods. So this would be 5 minutes. And I see this continuing to go upwards, then yeah, maybe I should take the trade. So just kind of, if you think about it in that terms, when you look at the different lengths, that's really important because people don't think about lengths. If the MACD is considered shorter than the RSI at 14, so 12 to 14, MACD is going to show you a trigger before RSI. If that does that make sense to everyone? Now you can switch this around. Like you can make RSI go 10 length, so it's shorter. So remember when you're talking about length, it's going to be the average, or it's going to do the summation of, of that, of the length of the time frame. So, okay. So before moving on, any questions?
Sorry, Chris. So we have the RCI at the top, right? That's the RCI.
Yeah, RSI.
Sorry.
S as in Sam. Yeah.
Yes, sorry. RSI at the top, and then the middle. What is that?
Oh, okay. Let me I'll type these out. That's actually, I should have done that. So SMA, RSI. This is something I'll have to do next time. So this is good. Perfect. And then right here, this is volume. So I haven't talked about volume yet. It's just Thinkorswim shows volume. So that's just what it is. Okay. Volume is important, but I want you to get this stuff first before you start looking at other stuff. Other traders will say, volume, but volume, I consider that being momentum trading. So kind of when you look at, like how many people are getting involved. But if you look at these indicators, it kind of silences it in a way, but I don't want to go forward on that because there's still other stuff to look at. Yeah. So next thing. Now you're thinking, okay, so you've got some, you have some idea of when to look for potential points. Now you're like, okay, what do I have to do to determine like what should I look for in terms of price? That's when we talk about Fibonacci sequences. So now this is going to get a little bit more advanced because we're going to draw 2 more things. And so Fibonacci sequences, that's just a golden ratio. It's a math term that's been used. And just from a math background, this ratio, it's been found all around the world, like in terms of like development of your hands, feet, shells, like from snails, things like that. There's a ratio around it. It follows either a circle, a spiral, and some other stuff. If you want to Google more about it, just Google golden ratio, made by Fibonacci, back in medieval times. And now I'm going to show you how to draw that. So Fibonacci sequences, that is in most brokers, but with Thinkorswim, I like it just because I can see and I can change the colors. Some brokers don't allow you to change the colors, but I'm going to show you that. So let me just get rid of this. Some tips with these. This is how I do it. You don't have to do it my way. I know some people, they include everything, but it gets kind of wonky. So just some tips. So these are Chris's tips, not for everyone. I exclude crazy data, so things that just go way out. So a good one would be GameStop. GameStop went up to like $550. So it goes back to like the realism part with picking options. What's realistic? So when I draw those, I look at what's realistic in terms of the time frame. How far do you draw back? And this will make more sense in a second. Set a time frame of how long you want to trade for. So for example, if it's 1 month back, draw 1 month back. But there's also, and I know I said to exclude crazy data, but also look at the big picture. So I know these kind of like cancel each other out, but you can draw them multiple times. So, and then but that's when it gets all crazy. So I would just say, look at your time frame and exclude any crazy data. So like pump and dumps, you know, that's harder to draw. So let me actually, well, yeah, I guess we can do, we'll do NQ. So I'm going to trade, let's say I want to day trade this. Now you can, now in terms of what your length is, this will not matter. So if you want to draw it with the day chart, that's fine. If you want to draw it with the 5-minute chart, that's fine too. You'll see what happens. Okay. So what I do when I'm using the Fibonacci sequences, so I'm on the day, I'm going to click on drawings, drawing tools, and then this percentage. And it says Fibonacci retracement. So let's say I want to trade this. I'm thinking maybe, I guess if you're doing a day, draw it on a 5-minute, but I want to see a larger picture so you can see what happens. So I'm going to draw from August, I'm going to draw the whole year. So what you do is you start from the top of where you want. So always start from the top, and I'll write this. Start from the top of the very top of the stock, draw it to the very bottom. Okay, so I'll type that. So when drawing, start from the top, then draw to the bottom. So this now you'll see these different zones. So this goes back into what I talked about on Tuesday about zones. So when I look at this, you've got, and I know it's hard to see, that says 100%. You don't have to really worry about what those percentages are. That's just the Fibonacci percentage right here. But those will tell you certain price points to look for. So let's say, for example, now this is the NASDAQ composite. Let's say it again, remember, if something hits it, it tests it or it goes to it, and then this draws down and it starts going down. Draw arrow. Starts to go downwards. Let me go to red because it's bad. So if you were to maybe say, okay, it's going down, I don't want to get in, I'm not sure. These are zones. So what you would do, a strategy would be, is when you draw these retracement lines, a strategy would be to set an alert or to just take a mental note on the price points that were created. So you can see over here, this is roughly 14,000. So it's what we're looking for is if it hits right here. Okay. Another zone is if it goes down here. And then you got one right here, there, and there. So what these are doing is that it's kind of showing you some deviations, and I say that lightly, some deviations of where this could go before it either tests it like we were talking about before, or it could hit it and then go back upwards, or it could go downwards. So the strategy when you draw these is, okay, you know, if you were to day trade this, you know, you would say, okay, well, I know some points, some dollar amounts to get an idea, to maybe I'll want to go in, because it could happen to where, you know, your MACD is showing, hey, it's looking like it's going up. So it's kind of just building upon what we were just doing. Look for all the indicators. You know, let's say RSI is up, MACD shows across, SMA is going upwards, and it hit a line, a specific zone, and it's going upwards. This is just another type of confirmation that can occur. Let me show you what this looks like if I were to draw it on for a day, to day trade this. Let me just delete this. So before I draw that, does that make sense on terms of drawing the Fibonacci? So again, you select it on your tool. How do you do it on other brokers? I don't know. You'd have to look, but it's very simple, or sorry, they're all similar language. I just start from the very top. I can exclude stuff, and I'll show you an example for that. but then you draw from the bottom. So if you start from the bottom to the top, it's just going to inverse. So like in terms of when you see the percentages, but that's it. But so any questions while I go back? So I'll just do a 5-minute. So if I were day trading this, so again, oops, sorry. So again, I can do this from the top to the bottom. Now this is NQ. There's nothing weird about it. Like there's no weird spikes, even though you see a whole bunch of this all over the place. What I can do is just go from here to down there. So as you can see, and actually this is drawn very nicely because there are some points. So notice right here. Notice how it approached it, but then went downwards. Notice right there, it approached it. So these are going back to these zones that I were talking about. Now you can draw a line, yeah. And then you can see it kind of hit right there, and then it went back upwards. And there are some things I didn't talk about on purpose because I don't want you to start thinking in that term just yet. But as you can see, it touched there, but then it continued upwards. Notice again, hits there, then went down. Then it finally zigzagged around until it wanted to go all over the place. So if I can actually, I'll zoom in right here. Oops, let me get rid of these. So if you looked at right here, it approached that 61.8% line. That's just a zone. Like, don't think about it as a percentage of what you would normally think, like, oh, it's only at like 68% of its price, things like that. Excuse me. But you can say, oh, hey, this hit there. Okay, let's take a look and see what's going on. I look at my RSI. When you draw these, if you're using Thinkorswim, it resets on some brokers or their platforms. But with Thinkorswim, it doesn't reset. So you have to click drawings again, drawing tools, and what was my yeah. So if I look right here, okay, it hit it multiple times. Now I know it's kind of hard to see. Let me make this larger. But you can say, okay, so here's a good thing. RSI went upwards. Now I know it's hard to see the MACD. Let me. So I'm not focused on the Fibonacci stuff right now. I'm just looking at other stuff that's going on to see. So the first thing was, hey, this thing hit my Fibonacci sequence. Okay, well, let's take a look. Okay, well, RSI at this time, it went up, then it went downwards, but, you know, SMA is still going upwards. So, okay, you know, there's false signals, you know, just like how there's false positive or false test results. You know, because there was a cross here, it went upwards. So, okay, you could have gotten in for a little bit, but it hit. And then as you can see, this approached downwards. This approached downwards. Arrow. Okay, so that was my first signal. Oh, look. Okay, this crossed and it's going downwards. Oh, look, RSI is going downwards. SMA is still going upwards, but again, I know this is calculating the average of 50 lengths. So obviously this is going up. You can change the SMA, remember? So if I were to change this, and I'm just changing it to something that I use sometimes. And I'll go into more tips on stuff, but I want you to learn all this stuff first. But it's still going upwards. So this may be a good time to short because it hit there. Now, maybe I could be like, well, I mean, I can't really day trade. You know, I can't watch it. So maybe what you can do, let me make it a little bit easier to see, is you can actually look at your Fib retracements that you drew. Oh, which one did I look at? Right here. So I can look at this yellow. So that can be so this would have been a short. So you could have been like, okay, if it crosses here, then I want to pay attention to it. Or if you were to go long, you could be like, hey, this is where, which you wouldn't have done if you looked at the technical stuff, but you could put a stop loss right there. Because if it were to continue downwards, then you'd get out, get it at a better price point. So kind of going back to how you could use these Fib retracements, let's just say you entered in this area, you can set alerts for these price points. And I know it's kind of hard to see, but this says like 14,654. This says 14573. So those are just things you can add. These will not always be pretty. I mean, you can see these cross, these go around, but these are, again, just giving you general ideas of how to get in, how to get out, maybe what to look for. So like if you, let's say if you were just going to do investing with a dividend stock and you want to buy at a good price point, then you would send an alert. You know, you can set those up for this when it approaches these price points. In terms of stuff that I've talked about, I think these are more advanced. So let me go over any questions, and then I'm going to go over one more thing, and then we'll continue on Saturday. So any questions on these? Oh, let me actually show you one thing. I do apologize for forgetting. The part where I mentioned to exclude crazy data, the best one is to say GameStop. And I want to throw that warning out to you because, you know, some things do go crazy. So if I were to draw my Fib retracement lines on GameStop, you're going to get, it's not going to be as accurate as something that I would call quote unquote normal. So let me just show you that. So again, drawing tools, oops, percentage. So if you went by what I said, draw from the very top to the very bottom, look what you get. Okay, it does hit some zones, but if you're going to swing trade or day trade this, or even long term, you may not get a good picture because, you know, you've got this zone up here. This didn't touch it. These are intersected all over the place. Yeah, it hit there once. Yeah, it's around this zone. But if you're looking for more short term, you know, again, draw the length that you want to trade it for. So if you're going to trade a month, look at 1 month's data. So what's the date today? So I would just do this instead. Delete that. So again, now if you look at this data, you know, you can go to this very top because this is a month, but think about it realistically again. Now, again, this is a meme stock, but again, this is where I'm saying some of these technical indicators may not work as well. So when you say exclude the data, look where it's been generally trading. So you can see there was a huge wick right there, meaning that's where it shot upwards. And then there was a huge sell-off. So I wouldn't even include this sell-off, in my opinion. So I would start the next day and get a better picture. A lot nicer if you see it. A lot nicer. Look at that. And this is mathematically done. I mean, this, you know, so when you look at some of this stuff, look how gorgeous that looks. It's very, like, see, it hits there, goes in between there, in there. Now, am I saying GameStop is this is what it is? I will not comment on that because it's more retailers. So they're looking at the same data as you. So I can't confirm nor deny if this is accurate for other ones, but let's take a look. So so for some of the audience, throw me a stock and I'll draw a Fibonacci sequence so you can see.
AMC. AMC.
Okay. Well,
I know that's a meme stock as well.
Hopefully Dan, yeah, hopefully Dan doesn't, I think Dan and I have
some. That's for you, Financial.
Yeah.
AMC.
Good pick.
See, oh man, I'm getting red because I may see conflicting data. So let's see. Okay.
Let's see what we can get out of it. The most we can get out of it.
Okay. So, all right. I follow the same rules, exclude a lot of this crazy data. I mean, yeah, it hit up to 72 and 91. So that's why I kind of put rule number 3, like look at the bigger picture. So yeah, I can draw the bigger picture. And one thing I didn't talk about actually real quick is there's things more than the 100%. So if you see right here, let's just say I drew this. Oops. See how there's the 168? Mine's just set to that, but you can show other zones. So again, this is a ratio. So if you know ratios, that's like for every, so if it's like 1 to 3, that's for every 1 it's 3. So obviously the larger the price goes, the larger the ratio is going to be. So if something's like 1 to 3 and you start at 10, so it'd be like 10, okay, 1 to 3, so it'd be 30, then it'd be to 60, then it gets larger. Okay, but anyways, okay, going with AMC. So this goes back to the beginning of June. Now I'm looking, so I want to see, because if I want to trade this now, I mean, I can kind of see it was touching down here. So, at this time, but it started to go upwards. And it did do this huge thing. So if you see, like, yeah, this was like an exponential growth at this point, but I can kind of see right here. I see a zone kind of right there, because see, it hit there, it tried to go, but it kept going, and then it did its thing, but it started to approach, and then it was just kind of hanging out. Then it's kind of doing its own thing. So I would actually draw, I would include the, yeah, I guess so. So I'll just choose right there. So you can draw this however you want. See, this line goes wherever. So I'll just draw there. Yeah, it paints a pretty decent picture. So these can tell you certain price points. So like, let's say you entered in at one of these time frames. So you can see it was hitting these zones. Now, I mean, obviously some of these cross, but there's that. So if I wanted to look in terms of, let's say I wanted to swing trade this for the week. So I'll do a 30-minute chart. So if I did this for a week, this is what I would do. So this is going to be more of an advanced thing. So what I'll do is I'm going to stop the video real quick. So just hold on a second.